All right, guys, welcome to this channel today. Um, I want to just quickly break up some of the charts and look at the trades that we have going into the New York session. We're still in the London session today. It's been a while. I've been on this channel, so let's quickly break down a couple of charts and see what we can learn from these charts. Okay, today is the 3rd of February 2026. Okay, this is Skills Edge FX Academy. It used to be Trading Masters, but we had to, just make it to align with what we already have. So, all of the details of this channel will be Skills Edge FX Academy on all platforms. All right, these are traits that were previously analyzed. You can see what we did here, but I'm going to clean up the charts and I'm going to show you what we have here. So, yeah, so this is USD card. Okay, um, this is USD card. USD card, as you can see, is in a downtrend. Yeah, USD card is in a downtrend, and you know, we'll start from the daily time frame. We are purely down, right? It's if you go to the weekly, it's also there. So right now, what we see is there is a demand zone here, right? And the market also came to a supply zone, all right? So right now, what we're waiting for USD card is to wait for reactions at the zones, right? Now, when price comes to a zone, you need to wait. You don't need to take a trade at a zone just because the market's at a zone. Because when price comes to a zone, it will do three things. One, it can decide to rest in that zone and do nothing. Do you understand? Yeah, you can decide to rest in the zone and not do anything. Then wait for breakout. Number two, you can break off the zone, return back again. That's a fake out, because when the zone is broken and is not respected, it becomes a fake out, right? Then number three, it can respect the zone and not break out of the zone. So these are possibilities, and that is why the key to succeeding in trading is waiting. A trader is not somebody who clicks buttons buy and sell. No, a trader is someone who waits. Even as an entrepreneur or a retail trader, when you go to your shop or to your office, you just have to wait. You went to your demand zone and you started selling. No, or you started buying. You have to wait. And also you have to wait for the right setup. Not every customer is a serious person. There are customers that just come to play around. They don't want to do business. You just want to waste your time. You don't encourage them. You don't spend your energy and time and start negotiating prices with them. You'll be wasting your time. So you wait for the right setup. Once you see the right setup, you cannot make decisions, negotiations, adjustments, and strategic way to get the customer to buy. All right. So it's the same thing that happens on the chart. The only difference is that you're not dealing with physical and visible customers here. But everybody who's on the chart all over the world is a customer to you, because for every buyer there is a seller. Are you getting the point? So once you click buy, it means somebody is going to receive the buy from you from somewhere in the world. Okay, if that's what it is. All right, let's go away from that now. So this is supply zone, right? Now look at what happened here. If you notice, there is a zone here where this price broke out of. So we need to be careful, right? Because once price breaks a zone and moves to another zone, there's likely to be a breakout, because there's going to be a reaction between zones and zones. Do you understand? So you have to look at the chart very well. You are interpreting the chart so that you don't have an assumption. So this is daily. Let's go to the 4 hours very quickly. Let's not spend more than 5 minutes on the chart. On the 4-hour time frame, we discovered that, like I told you, the market broke above a zone, came and retested the zone. Now, what do? We can do nothing here. There's nothing you can do when price is sandwiched between two zones. If you do anything, you're going to hurt yourself. So you must wait for the market to tell you what to do. You must listen to the market, So 4 hours, we're still in the supply zone. So let's go to 1 hour time frame. 1 hour time frame, we are still at the supply zone. You can see there was a retest yesterday. And if you traded this, you would have been good to go, right? So this is a higher high here, right? And price came back to retest the weekly demand zone, okay? And that is how it's pushing. So for now, nothing happens here, nothing at all, okay? So, but let me go further again to 15 minutes time frame. In the 15 minutes time frame, as at yesterday, we had a lower high, lower low. These are just internal market structure. We don't do anything with them, just mark them out, until price came down to the zone and confirmed a price action at the zone. Then that is when decision was taken. So at this juncture, for USDCAD, you have to wait for market structure. Either it's breaking above, retest, we take a buy or we sell. So for now, nothing happens on this. Okay, so we are done with USDCAD. As you can see, we can't take any trade on this. So let's look at USD CHF Swiss franc. It's the same structure. It has pretty much the same structure. We'll go to the daily. What is the trend in the daily or the weekly, if you like, depending on the kind of trader that you are. If you're a swing trader, start from the weekly. If you're a day trader, go to the daily. Okay, you can see that from the weekly time frame, we have a downtrend still. It's still a downtrend, very, very down. Because if the trend is down, the trend is down. You can't change the trend until the trend changes. So once the trend is down, don't think about buying, except you see a mini trend. Okay, because we have 3 kinds of trends. We have primary trend, which is the weekly. We have secondary trend, which is the daily. We have tertiary trend, which is the 4-hour trend. Every other thing in the market is noise. So if the weekly is trending down, all the behavior of the daily is just wasting time. After a time, it will go back to the trend of the weekly. Do you understand? But if the trend of the weekly changes, the whole trend has changed. Very difficult to return back again. So you have to look at the trend before you make your decision and understand the market behavior. Knowing that we are going down, even though it looks like we are buying, your mind should tell you this market will dump, right? Okay, so weekly we are down, daily we are down, price is at supply. Okay, very simple analysis. 4 hours we are still down. Okay, when you watch this 4 hours, there is still a sandwich. So once there's a sandwich, wait for a breakout. Don't make a decision when the market is between two zones. Nobody knows where to go to. It's likely to go to the direction of the original trend, most likely. However, the market can decide to keep going in one direction for obvious reasons beyond our knowledge. So you just wait for what they will do. Because no matter what happens in the fundamentals, you will see it in the chart. Everything is seen here. When Donald Trump makes a statement, you will see it here. When there's a war in Ukraine or wherever, it will show on the chart. How will it show? Break and retest. Once you see the market breaking a zone, it means something is happening somewhere. You don't need to know, but you just need to understand and interpret it on the chart. All right, that is the key of technical analysis, right? So for USD, Swiss franc, This is a no trade zone. We do nothing here until we see a market structure shift. If we don't see, we cannot do anything. At this juncture, the market is trending up on the 1 hour time frame. You can see this 1 hour time frame is trending up. Okay, so let's take this off so that we can see the chart properly. This is trending up. We know the trend is down, right? On weekly. We also know it's down on daily. We also know that it is down in the 4 hours. However, the 1 hour is going up, so we can't sell. Now, what do? We will keep buying until 1 hour changes. And if you are someone who doesn't want to do counter trend trading, you just wait. Once there's a break of structure in the 1 hour, right, and there's a retest, then you can sell. So this is a waiting business, not a business of trying to predict where it will go to. If it's not going, it's not going. Do you understand that? So for this particular trade, there's nothing here to do. All right. If I would do anything personally, I will want to buy, but there's nothing to buy here because this is a demand, a supply, and this is a demand. So we wait for breakout or break up. Anyone? Once it breaks, we can join. So for USD, Swiss francs, for me, is a no trade pair until we get a signal. So let's go to gold. Mighty gold. Let's look at mighty gold. Gold has been crazy, right? Gold has been terrible. But however, there's nothing too hard, that you cannot do when it comes to trading gold. So let's analyze gold a little and see what we see. Now, analysis is key because the market movers or the market behavior, like I said, is seen on the chart. You need to trade what you see. Don't trade what you think. You would lose money if you are thinking and assuming. I was watching some people yesterday analyzing the chart with so many followers and their subscribers watching, and they are telling me that gold is going to go down. Oh, come on. you know I'm not trying to be sarcastic here, but you see, when you look at the market flow and you see what the prices are doing, you know that gold has come to a strong zone, a support zone, a demand zone. Then you will watch the market structure shift and know that this market is no longer selling, it is now buying. It's clear, it's seen. But people come with some, myopic bias. Gold is going to go down. I'm not buying. Really? You are not seeing the market. You are not really reading the market order, the order flow of the market. Because if you read the order flow, you will just take instruction from the market. So you don't lose your money. Do you understand? All right, away from that. Let's quickly break down gold. Let's go to the daily time frame. We'll start from the daily because day trading starts on the daily. You copy that now. All right. In the daily time frame, what do we see? Gold is still bullish. We have not yet changed direction. This is critical because when you don't understand the market flow, you will think gold is going down. Gold is not going down. Gold is still up. And if I say up, it is still very up. There is no signal showing that we are going down. Do you understand it? So let no man, well, it's my own, that's my idea. You can listen to anyone you want to listen. I'm not giving you financial advice. I'm just educating you for free. Do you understand? So let's quickly look at it. Gold is up. Number two, gold came to its demand zone. As at yesterday, this zone was very important and it pushed back. So where is it going to now? Gold is going to a supply zone. The market moves from demand to supply. From what? Demand to supply. And this is a huge candle that moved today. So we have a zone here on the daily, okay? And we look like we have another zone here, but I won't mark up that zone. until I go to the 4 hours, because if it's not clear on the daily, I can't assume it's a daily zone. So let's go to 4 hours. The 4 hour time frame tells me also that gold came to a demand zone and the buyers are strongly in the market. Is that okay? Now let's see if we are going to be having reactions today, 3rd of February 2026. All right. This is how I think about the market, because your thinking is critical to your decision making. So we have a zone here, 4 hour zone. I'm supposed to use another color of zone, but let's just take it the way it is, All right. So this is a 4 hour zone here. So this market is likely coming to that zone. And when it comes to a supply zone, we should expect the price to most likely return back to another demand. This is how the market works. All right. It works according to order flow. Where are the institutions placing their order? If you have $1 billion to trade, where will you put yourself? You can't put it in the middle of nowhere, because your risk management will be too wide. So you need to think like the banks, right? Think like somebody trading $1 billion account. You can't just click buy yourself in the middle of nowhere. You see your account, evaporating like boiling water. Do you understand? Yeah. Okay, so we also have a zone here we should not neglect. This is one zone here. Price has already reacted to it, and we are waiting for the results. Yeah, this is a zone. Okay, 4 hour zone. Then this is another zone here. So that's why I said when price comes to a zone, just be patient. Don't predict the market. React to what the market is doing. Okay, this is about a 10 million people more all over the world making a decision about where we are going, up or down. You cannot sit in your office or in your room or in your couch with your $5,000 account and determine where it's going to. You will be eternally wrong. You'll be wrong till eternity. So what you should do is to align with the market. Do you understand? Where are the institutions, the banks, the hedge funds? What are they doing? All right. Okay, so this is just education for you, right? I'm just trying to give you the zones. You can see the kind of warfare that happens at zones. So when you come to zones, just be calm and be patient. All right. If you are not patient, please stop trading. If you are impatient, go do something else. Do you understand what I'm saying? And there's nothing on earth you will not be required to be patient. You get to the airport, the plane has not taken off, you need to wait. You can't run to the tarmac and join any train, any plane, and say, please, I'm in a hurry, even if it is New York, let me just land. From there, I'll go to Frankfurt. You will not only land, but you will waste your time. So be patient. Patience is a virtue, right? So that is a 4 hour zone. Let's go to 2 hours. 2 hours is telling us that we are still in the same zone. Does it make sense now? Right? And there was another zone here which price reacted to, but it broke off it. So we're going to recognize that zone, and we're also going to recognize this zone. So for you to take a trade or make a decision, you need to be patient. All right. So we have a zone here. The market is bullish today, very, very bullish. We're not intending to sell, except you want to scalp. This market is still going to go up because it's a bullish movement. But let's see. We cannot predict, but let's keep analyzing these charts. I hope you're enjoying this analysis. I'm doing the analysis from daily, and I'm going to do it until 1 minute for you to see that all time frames are important. Do you get it now? Okay. Now this is 1 hour time frame. Please subscribe to this channel so you can see it's a higher high. That's why I told you those who thought it was going to sell yesterday, they were missing the context. Okay, you must understand the context of the prices. All right. Don't forget that trading is purely taking advantage of available value. You're not just trading a chart. You're not just trading price. You are trading value. I don't know if you get what I'm saying. You know, profits are made by exchange of value. Gold represents the value of the financial worth of many organizations, countries in the world who hedge their investments with gold. The US dollar, it represents the US economy. So if gold is going up, it means that the US dollar is down or the US economy is down. That's trading. You are trading an economy. You're not trading a commodity. You're not trading a cloth, or you're trading a box, or you're trading cement or roofing materials. You are trading economy of a country. That's what trading is. So even if US economy is down, it means gold will be going up. So what do? You buy gold. If you have money to go to gold souk or where they sell gold in the market, the same price. When you get there, you buy it in the morning because you know it's going to go up. In the evening, you go back and sell it. It's another form of business. But you don't want to go there because you have to wait till the end of the day. You can do your trading on the chart and take your profit instantly. Okay? So you are trading value. So you put your money in the direction of value. So that's why the trading business is not gambling. You know what I'm talking about? It's a skill set oriented business. Now, of course, this is Skills Edge FX Academy where you're going to be learning how to trade just like I'm doing now. Okay, this is not rocket science. This is top-down analysis. I'm looking at the trade from the perspective of the institutions who trade at a higher time frame to the perspective of the retail traders that take entries on the lower time frame. Do you understand that? So this market has been doing a higher high, higher low. Okay, I won't teach some things here. I'll just keep them until when you come to the academy, you will learn. Okay, I'll tell you how I'm finding these things out. I don't even need to draw anything. I just need to look at it and know what's happening there. Do you copy that? It's just a matter of mastery. It's about time. It's about experience. Okay. All right. So we are in the 1 hour time frame. We can see there's a higher high there. Let's look at 30 minutes. In the 30 minutes time frame, we have price sandwiched between demand and supply. Are you seeing what's going on? So when you see a sandwich, don't do nothing. Okay? Yesterday was fantastic, and I think today it's crazily good. Those who saw this yesterday would have taken this trade off this zone. You can see higher high, retest to the zone, price action. Look at this price action here. Clearly, this is not you know what I'm talking about. This is not scamish. You don't know it, so that's why you say it's a scam. Look at these rejections. Look at these pin bars. Look at this market structure. So the market is not unpredictable. It doesn't move in a random movement. No, it moves in structures. So wait for the structure so that your finances can be structured. Do you understand? Okay, let's go. So we have this inefficiency candle here. We are waiting for price to maybe come here. We don't know. Just mark it out. We have a demand zone already formed under the candle, under the fair value gap. We have this demand zone here. Okay, we're not going to take any action until we get a reaction. Do you understand? Okay, so this is a flip zone. Supply turn to demand, very strong. Okay, so this is 30 minutes. Let's go to 15 minutes now. 15 minutes time frame. I'm taking my time because gold is gold. If you are not good with this, you are going to have issues, because gold does not respect amateurism. It respects professionalism. Okay, let's go now. So this is 15 minutes time frame. We have a higher high that was happened here to the upside. We have an inefficiency candle here, expecting price to come and retest it. Then we have a supply zone here. Then we have a demand zone here. So what do? Answer is do nothing. Do nothing until you are told to do something by the market. Okay? The market tells you what to do, not your brain. Once you use your brain, you will fail. I'm going to make a post. Don't use your brain to trade. The brain is a bad trader. Human brain is what? A bad trader. Anybody using their brain will fail. Brains don't trade the market. What do you use to trade the market? Use the market to trade the market. Do you understand me? The brain is full of emotions, full of fear, revenge, full of greed. He wants to increase the lot size, wants to make more money. The brain is not a good trader. Please don't use the brain. If you are brainy, not here. Okay? Just use the market. When the market says sell, you sell. Market says buy, you buy. So I'm going to teach you how to listen to the market. It's like when the Bible says, um, look here behind you and you will hear a voice. Without a voice, you can't be a voice. Do you understand me? Okay, this is 5 minutes, right? Some people now will start selling. The market is selling. Stop. Don't sell until the market says sell. Do you understand? Now let me teach you a little about what the market says. How to know what the market is saying. Watch. When price comes to a zone, anytime price comes to a zone, that is a time to listen. I'm giving you a secret now, right? If the price comes to a zone, listen. But I'll not tell you how to hear the right voice. I won't say it now. Okay? But if you watch me, you'll see what I'm doing. You'll see that look at this now. See how to listen. Look at it. Did you see this? Is this a scam? This is not a scam. This is pure technical skills. This is pure. There's no sporadicness. No sporadicness. No, is it going up? Is it going down? Do you understand me? Some people now will be selling here. What are you selling for? You're not doing what the market is doing. Do you understand? Look at this. This is pure science. And this is 5 minutes time frame. As soon as it finished its own decorative dancing, it aligned with the higher time frame. Anyway, let's leave that for now. This is education. I'm not asking you to take any trade. So now, finally, we are on the 5 minutes time frame. Look at where price is. What do we do here when you see this? Price is ranging. In a ranging market, do nothing. Don't buy, don't sell. It's ranging. In a ranging market, what do you expect? Breakout. How do you know a breakout? Look at this. Did you see what I just did now? You see what I just did? Touch one, touch two, confirmation. This is where to take the I'm not saying take the trade, but you know what I'm talking about. Okay, so but if you want to be safe, right? Because knowledge is at different levels. Wait for this price to break and retest before you enter. Never you enter a buy on a supply zone. You will be shocked that the market will teach you some lessons. Don't buy at supply. Don't sell at demand. Wait until the zone flip. Once the zone flips, you can make a decision. And if it flips, still wait, because it can be a fake out. Do you understand? It can be a fake out. This is a global market. Okay, so now we are looking at this price going up, coming down, and we enter it without stressing ourselves. Or it comes down, breaks this, retest, and we enter. You got to be patient. This is the beauty of the trade. You understand? And while you are waiting, you can do some small calculation. What is my risk in case if it breaks down and I want to sell? I'm entering at this point. My TP is down. My stop loss is above that structure. I'm risking 150 pips. Do your calculation already before the thing happens. Do you understand? Don't wait. You'll be emotional. So once you do this, you check it. 15 pips. So if your account is $100, 0.01. If you use 0.02, you're looking for trouble. If you use 0.03, you are being attacked by the forces from your village. How are you following? That account will disappear. Okay? Because there'll be drawdowns. You don't control this market. The market controls the market. So now you use 0.01 if you are using $100 lot size. $1,000, use 0.1. Don't, in fact, use 0.05. And please, when you take the trade, don't remove it. Don't say, it's changing. Don't do it. It's that it goes down, it goes up. Do you understand? I'm not saying enter the trade now. I'm saying position. Break of this line, retest of this zone, then you can take the entry. I'm not saying take, I'm just teaching. Please don't mind my language. I'm just saying break and retest, right? Then second possibility is a long. Yeah, you can see I'm taking either long or short. It will do any of these two things. He has no choice. He cannot remain here forever. Do you understand? Some people will enter long and short. Please don't do long and short. It is gambling. You're not sure what you are doing. If it goes up, I go up. If it goes down, I go down. No. All right? You are positioning. That's what I'm doing here. You see, I'm doing double positioning. Positioning for a buy, breaks, retest, I buy. I don't care where it goes to. I care about the confirmation. Once it confirms a sell, I'm selling. Don't forget it's short-term sell. Okay? When it confirms a buy, I'm buying. Okay, ladies and gentlemen, I think I will stop the stream here. The other pairs I want to analyze for you to see. So this is how we came here. See how we came here, all the way from the daily down to the 5 minutes. Now let me take it to 1 minute. Why do you need the 1 minute time frame? I'll teach this on a separate video. 1 minute time frame is the best time frame to enter on gold. If you master the 1 minute, you are a master of this asset. Don't enter if you're not on 1 minute. You will be shocked on how your account will get into drawdown. But I'm not teaching this now, right? 1 minute is the best place to take a trade. So in the 1 minute time frame, what do we see? Higher high, higher low, higher high, higher low. Do you see something? So you can see all this thing is dancing here. It's dancing to take off some people and go back to where it's going to. So I've already seen where it's going to now because I came to 1 minute. However, if it changes its mind, we'll also follow the market flow. So ladies and gentlemen, we are done with this stream for now, and we'll take a break. Be careful. Don't just trade anything. Wait for confirmation. No indicators. Indicators will indicate the wrong things for you. Use what the market is saying. Don't be in a hurry. 2 trades per day, 3 trades per day, you are good to go. 2 losses in a row, stop. The enemy is around the corner. Don't keep trading to revenge. It means you have lost your procedural thinking. It means your emotions are beclouding your judgment. Just stop and go and break. If you keep trading after 2 losses, it becomes a trend. You will get 3 losses, you get 4, you get 5 straight. That's what it is. It takes 2 troughs or 2 peaks to make a trend. That's why we say 2 losses, stop, is a trend already. The amount of 2 or 3 witnesses, a matter is established. So if you don't want establishment of losses, please, after 2 witnesses, just stop trading. If not, you will have establishment of losses. That's this Bible for you, okay? So are you getting the point? So for now, we have 5 minutes time frame. We have a change here. Like I said, this is the lower low. It has not yet tapped into the zone, so we are likely going to come down. So for me, my bias is a sell. Yes, I'm taking a sell for me because I see that there's a lower low here and the market has not tapped into the zones. Look at the zone here. So we are hopefully most likely going to be breaking low and coming down here. But that's not a financial advice, please. I just told you you can either buy or sell. So make your choice. So that is XAUUSD, the mighty gold. It's not mighty when you have the knowledge. So we have AUD I don't have time for this now. GBP USD, all of them going down. That tells you that gold is going to go down. DXY is telling us that gold is up. So the US dollar is up now as we speak. So we should be expecting gold to go to the downside. Good luck to you as you trade. Wait, please.